Hi and welcome to the Trading Bell Show. We're right here at Equity Center to speak to the Group Managing Director and CEO, Dr. James Mwangi himself, to understand how is the bank doing amidst all these macro effects that we're seeing, and of course, what is a message of resilience to especially the customers. Dr. welcome to the show.
Thank you very much for having me.
Very well. You look still fresh and uptight. Looks like you have a regimen that you need to teach me about. But it's good to see you. Let's start this conversation on what you just recently did, the latest event, if I may call it that, on the financial side of things. And you released your Q3 and you're just about to release your full year results. And I'm curious to know from your perspective, what are you foreseeing coming? And of course, I cannot preempt your results, but what are you foreseeing coming, looking at the operating environment that you are in?
2023 was a very, very difficult year from a perspective of operating environment.
Yeah.
And this is not a Kenyan operating environment, it's a global operating environment.
Yeah.
And there's transmission of whatever is happening globally because the financial sector is very highly interconnected.
Yeah.
So we are operating under an environment still of heightened inflation. Interest rates have stabilized at very, very high rates.
Yeah. And
exchange rates have been trying to balance off the interest rates and inflation. So we have seen a lot of volatility at that level. And so these three forces being not in equilibrium position provides a lot of challenges for both the economic the managers of the economy and managers of enterprises. But we trust and believe that the shock is starting to wind down. It may take a year or so before we now start feeling the positive impact. But that unwinding seems to start this year.
Okay. I'd like you to comment on how you plan to improve or sustain this particular performance that you've had, because you're still doing very well. But over and above that, as you comment on that, I had a conversation with the Bankers Association, Dr. Habil, and he told me when Central Bank revised their interest rates, I mean, it's going to affect the entire sector as a banking sector. And I'm sure you've had a hit as well on that, just like your colleagues out there. How are you navigating this to continuously maintain your performance?
As we said, this is a very difficult year financially. And from equity perspective, this year we are not looking at our performance from a balance sheet and profitability, but from the health of our customers. The objective this year is to sustain our customers, to support them to go through this very difficult period. So numbers will be what they will be.
Absolutely.
My concern is, are we able to support the customers the way we supported them during the COVID season?
You're right.
And save businesses and provide livelihoods to enterprises so that they can support their employees. And if they are family businesses, they're able to support their families. We believe good days are ahead of us, but for the time being, it's the focus is survival of the businesses. From a central bank perspective, I don't envy the role of a governor of the central bank at the moment, because essentially he has to manage the transmission of the impact of the economic prices, that is inflation, exchange rate, and interest rates. And that delicate balance has found him where he is. The last time he increased the central bank rate from 10.5 to 12.5, 200 basis jump in just one incident. We see this time the inflation has shown its aggressive phase again. The underlying inflation and top line inflation both have increased by about 200 basis points. So we are waiting to see what the governor will do on 5th of February.
Yeah.
That is today or tomorrow.
Anytime.
So, and we take guidance.
Yes. Yeah.
But essentially, we in the financial sector is, yes, do the allow the transmission to pass into the economy,
yeah, but
cushion the customers. Try to cushion the customers. As we said, this shock might break by the end of this year. The question is, how many customers will be in a state then to start all over again by the end of the year? How many customers will have been preserved?
Yeah.
Numbers, as I said, will be what they will be.
Absolutely. Well, speaking still on the numbers, because you are one of your diversifications in the insurance sector, and I wanted to just understand from you and any insights into your performance in the insurance sector. How is it doing?
This bank was built on financial inclusion.
Yes.
We started off when only 4% of Kenyans had access to financial services. Now 90% of Kenyans have access to financial services. So we had to change the business model.
Absolutely.
And we have now focused on segmenting the market, seeing where people have landed over time, how well they have used financial services. Yeah. And we have realized as people made progress and moved on the ladder, whether they have moved from micro to small, from small to medium, from medium to large enterprises, they need a different value proposition. And we have focused on product proposition so that the value is on the product that support businesses at where they are. Absolutely. And out of that, we realized two things. We needed to diversify our offering. People needed more than banking. They needed to secure the assets they had achieved. Absolutely. We had helped them enhance the quality of their lives. They needed to invest in their lives and secure their lives. They needed health because now the focus is the quality of life, and health is central to that. So we have moved now to become one-stop shop for financial services. Okay. So you get insurance, you get banking, you get investment, you move money, you make payments, just in one under one roof. Wow. At the same time, we realized our customers have continued to grow and have moved from the Kenyan market and now are playing in a larger East African community market. And as a result, we have had to follow them. And now we have become a regional bank, having presence in the entire East African community. Absolutely. And that has given our customers a very significant market size. And we have followed that by being a catalyst, by conducting trade missions, like from Kenya to DRC, from DRC to Rwanda, from Uganda to DRC, and the same, just to create and to give what the customers are looking for. Okay,
wow, lovely. And just finally on the numbers again, and you've just mentioned the regional presence that you have. I'm curious to understand, what are you seeing in your perspective regionally, the acceptance, the growth, and what are you observing?
In terms of numbers, we have started seeing that the regional diversification strategy has worked perfectly. Great. To be honest, when you look at the economies, the shock has been more severe in Kenya. So while we have had difficulties in Kenya, steadying the ship in terms of numbers, the experience in DRC, Uganda and Rwanda has been very different. Those are markets that during this period have been very resilient and has registered the extraordinary performance, covering any gaps that we have experienced in Kenya. So that has really given a flavor to the organization, now not being a Kenyan risk, but a regional risk. We realize 50% of the balance sheet, it's outside Kenya now, and maybe more than 50% of the profit will be coming from the regional subsidiaries. And so we truly can say East Africa now has produced one of its Kenya has produced one of the biggest East African regional company.
Wow. And certainly that's good hope even for companies that may want to learn from you as well to expand regionally. Let's talk about your acquisitions. I've seen you've been quite bullish on that, and I think the latest one was the Coach Bank. I'm trying to just pronounce it in the French way. You teach me this. And of course, merger with Equity Bank Rwanda. I just wanted to ask you, these recent acquisitions and mergers, what are you looking to achieve and, to reach out in the region?
Yeah, Rwanda, relative to Kenya, is a smaller market in terms of population and geographical size. In terms of development, slightly behind Kenya, and we wanted to be a significant player in a small market. And the only way you grow to significant size is through acquisition and mergers. And so we targeted the fifth largest bank, who were number 2, and that has now given us a 19% market share of the entire banking industry in Rwanda, from 13% where we were. And that then brings the economies of scale. It gives a balance sheet that allows us to support our customers in Rwanda much better. Our single lending obliga have moved from an individual loan of $15 million. Now we can do $25 million. So in that market, then we are a sizable bank. But more importantly, we now have a balance sheet in Rwanda that can anchor regional trade. What has really been missing. So given now that we're either number 1, number 2 in Kenya, number 1, number 2 in Rwanda, number 2 or number 1 in DRC, number 1 in South Sudan, and number 3, number 4 in Uganda, we are now able to facilitate cross-border trade. And we have really become a catalyst of the African Continental Free Trade Area, facilitating to create one single market for our traders and businesses.
Wow. Thanks so much for that. And I want to move on to the Africa Recovery and Resilience Plan, because you are the heart of it. And just wanted to understand what progress has been made so far in this particular implementation, and how does it align with your broader vision for sustainable growth and impact across our continent?
The African Recovery and Resilience Plan is a business plan for the development and transformation of the African continent, spearheaded by the private sector. We've said the governments are doing their very best, but we need more than the effort of the government. And we have tried to bring together the African private sector and to bring its capital to the development space. And this development space, we are talking about enhancing productivity on the African continent, so that the African continent can be globally competitive. The reason why we haven't been doing very well in export is because of the productivity of our sectors. So we have focused on 5 sectors that we would really like to see productivity enhanced. The first one is agriculture. And we are saying, can we produce more with the same resources? And I'm excited that in some products we've been able to see 8-fold increase in productivity. The same acre of land producing 8 times when it was producing. So it is more of ensuring the right crop husbandry, the right use of the right fertilizers, the soil testing, the right seeds and care. And then linking that to the market, so that post-harvest crop management is efficient and reaches the market in time, and you reduce wastage. That is where we have captured that value. The second one we then said is, if we have been able to increase production 8-fold, what happens to that produce? And that has really become the raw material for manufacturing. And we are now significantly financing agro-processing. Let's add value on the African continent. And the outcome there is many jobs for young people, decent jobs in manufacturing, but the export value of our produce will go up exponentially, giving our government an opportunity to make better tax returns. So it is an integrated approach, creating a circular economy. The greatest opportunity we are seeing is in natural resources, what people simply called minerals. We have been an exporter of raw materials in minerals. The global manufacturing sector is built on raw materials from Africa. And we are saying, why don't we invite the global capital and African capital to add value where mining is being done? And we're very excited to see countries like Tanzania spearheading this effort. We are financing already a group called Somaika to start doing some battery parts in Tanzania. We are involved heavily in the special economic zone on the border between DRC and Zambia to try and add value to the minerals from DRC and Zambia, such that they are not exporting copper ore, but either copper sheets, cathodes, and that really creates a greater value. And exports fetch much more while creating jobs back home. Africa has 40% of all the strategic minerals that are required in renewable clean energy technologies. And it's said that at the moment, from export of these strategic minerals, Africa is getting $12 billion US. If it adds value, just even to make a copper sheet that level, what rudimentary value, that goes to $50 billion. If Africa is able to make the batteries, the final product, make the phones from rare earth, Africa would be fetching $2.7 trillion US. So you can see that's the money we want to grow back.
Very significant.
Africa would be an economic superpower.
Absolutely.
But we need to rearrange the supply chains. We need to be at the, not just producers of raw material, but really manufacturers of the final product. And I'm glad that the global reset, following the disruption of global supply chains, gives us an opportunity. The way we did with COVID, where we promoted manufacturing of PPEs in Kenya because we couldn't get PPEs. The way we are now focusing agriculture because we can't get grains from Russia or fertilizer from Russia, and people are setting fertilizer factories on the country. The way we couldn't get vaccines, and now we have built 5 vaccine factories in Africa. We should be able to do that for commercial entities. And that is how Africa can be transformed. In a nutshell, that is what we are calling the African Recovery and Resilient Plan, a platform for transformation. But let me hasten to add there are 2 aspects to the plan that are very central. Well, these major ecosystems are being built. We want African enterprises to be given an opportunity as SMEs to populate these value chains, such that it's shared prosperity with the African people. We want technology to be embraced in the Africa. We leapfrog such that we become a modern global African economy because we are using the latest. So there is a lot of emphasis on for the industrial technologies, generative AI, artificial intelligence, analytics, and all that big data. All these capabilities is what we are saying. And we are saying, can the government support in creating the skills that will be required for this African industrialization? And lastly, let's not develop fossil fuels as our source of energy. Africa has 62% of all reserves of renewable energies. Why don't we develop our energy from solar, from wind, from geothermal, from hydro, so that it's clean energy from day one. let's not repeat the mistakes of the agrarian revolution that polluted the entire of Europe.
Yeah.
Let's transform and industrialize Africa in a clean environment where we preserve nature. So those are the things that we are weighing and giving chances to the young African population.
Wow. When you spoke, I had a lot of things passing through my head, and I thought, wow, if this came up, I mean, Africa, as you have said, would be the super power in terms of just growth and economy. When I looked at the report by the Kenyan Bankers Association, one of the areas that they said hit hard the entire sector was the NPLs from the manufacturing sector. I think they were quite hit, maybe because of the inflation, as you said, the macroeconomic factors that were there. I don't know what has been your observation and what word of resilience you would give to the manufacturing sector, because you've put it very well. If we embrace the manufacturing, especially in the entire of Africa and the resources we have what it takes. What would be your word to a manufacturer there saying, James is giving me some hope, but
I think hard times don't last.
Yes.
The question, like us in the banking industry, we leverage on 3 buffers that we create during good times.
Yeah.
We strengthen our capital buffers. Okay. We build our capital during good times.
Okay.
We build liquidity during good times. And we then build reserves, provision reserves during good times. So when hard times come, what we do is slowly release from the capital buffers.
Okay.
So we are able to go through the shock.
Okay.
We release the liquidity that has been built, and we release the provisions that have been set aside. So you'll find that, like, before entering this shock, the NPL coverage for Equity Bank had gone all the way to 126%. So even if the NPLs goes up, our coverage will still be above 70%. Why? Because we prudently, I would say the same should happen to the manufacturers. During good times, put buffers in retained profit, so that you build your capital there. Set innovation reserves, and during those times do and it's these innovations that help the manufacturing. But I think broadly, the African Recovery and Resilience Plan is trying to offer a solution. One, to provide the syndicated long-term loans to the manufacturing sector. Okay. Equity has seeded this plan with $7 billion, but has brought in syndicating partners, development banks, who have added another $24 billion. So we can provide cushion by diversifying the capital base through debt for the manufacturing sector. The second one is working very closely with the East African community, the SADC, and the African Continental Free Trade Area to remove the barriers within cross-border trade so that we enhance the market. Sometimes it will not be margin, it will be volume. So we can try and bring, and last is what we talked about, productivity, enhancing efficiency in the manufacturing center. Lean times, we tighten the belt and we become more and more efficient. So those are the 3 things that we would like, and that's why we said we're supporting that sector to survive. And hopefully by the end of this year, the tide will be behind us. Better days will have come. Lessons have been taken, and we'll use those lessons to create resilience in the manufacturing sector. So that the next shock will not leave us the way this one has left us.
Wow, thank you so much for that. There's hope. Make hay while the sun shines. That's what James is saying right here. Finally, as we come to a close, Daktari, I must first of all congratulate you, because you hit the 100 mark of the clinics under Equity Afia, which is a great milestone. But also, just recently, I saw you at the Wings to Fly program. That's marking 15 years plus of this work that you've done. And this is brilliant, and it is impacting a lot of people in the society, and thank you so much for that. I just wanted to ask you, how has the impact, especially on the clinics part and this investment, played as a role in Equity's journey?
Thank you very much. A very important question. When we analyze, and you said NPLs are very high, or non-performing loan book has increased significantly. 40% of defaults comes through because people experience a health incidents within the family. And the business cash flows are diverted to support a sick person. If it becomes a critical illness, and God forbid it's something like cancer, you find businesses become technically insolvent. So we said we need to solve the root cause of then 40% of the default. And we realized that if we could provide our customers and public with high quality health, affordable health, accessible health, then we would be contributing significantly to solving this problem. We will avert the massive resources spent taking people to India. So to date, we have 102 medical centers. There are level 4 hospitals. So there is consultancy, there is lab tests, there is pharmacy, there is dental, and there is day surgery happening in all these clinics. We now have clinics in all the 47 counties in the country, and that was what accessibility was. And then we charge between 40 and 60% lower than similar entities, providers of health within the country. We have used the equity scholars who did medicine. We have 22,000 of the 60,000 scholars we have in the program, Wings to Fly and Arimu, who have made it to university. Of those 22,000, 1,200 have done medicine. And we have turned to them and said, let's create a franchise for you. We'll subsidize it. We'll leverage on the blood of the bank. We'll leverage on technology and infrastructure, and we'll support you with debt, but provide health at affordable rates at the highest quality. Now, given that these are A students, all of them 84 points, we can't doubt their quality. And it's a franchise that we supervise. And we are very glad that they have been able. What, on average, the total cost of consulting a doctor, cost of the prescription, cost of the lab test, and all the other services given would be about 2,500 shillings per visit. If you look at that, that is a tenth of some of the high quality service providers. And if it's like for level 4 hospitals, it's 60% lower. So that is the contribution we are trying to make to solve a problem we have identified. But I think the biggest one I would say is supporting entrepreneurs. As I said, we must support businesses. To date, over the last 5 years, we set the African Recovery, the African Young Africa Works program. And that was a response to COVID. We realized young people were home, and we said, why don't we train them entrepreneurship and give them loans? We have trained 680,000 young people. We have funded 462,000 with loans of about $3 billion US, 315 billion Kenya shillings. When we are very impressed, they have created 1.8 million jobs. In small enterprises. And that is the biggest contribution we could make to provide livelihoods to young people and create an incubation of future businesses. So you support that, you support agriculture, and we all know how much we have invested in agriculture, converting peasants into agribusinesses, putting them in export value chains. We're now the biggest financier of fruits and vegetables. And if you look at the flights taking off from Jomo Kenyatta, all of them are carrying fruits and vegetables, all grown by small farmers. We have supported 24 irrigation schemes to make sure that agriculture become resilient. It's not rain-fed, dependent agriculture. Those are the contributions that really give us a feel that we are doing a purposeful business that not only do well, but do good to society and spread the share in shared prosperity with the society and community.
Wow. James Mwangi, always a pleasure having you in the show, and really keeping on the resilience and the impact you have in the society. And thank you so much for your time.
No civilization has ever developed another civilization. We owe it ourselves.
We have to do it ourselves.
We have to do it ourselves.
Absolutely.
Thank you very much for having me.
What an ending. It's up to us. We don't wait for others to come through. We have to do it our own. And James Mwangi is leading at the front with doing this with Equity Group itself. Thank you so much for your time. I leave you now with the markets as I get some cup of tea with Dr.